Welcome to the September 13th, 2021 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your fast-paced global tour of the financial markets, and we include the top headlines from this week. Big inflation, huge headline, two components that we'll cover. 11 million jobs available. That's 1 million more jobs available than just the prior month, and it's a record with distance that keeps growing. At the same time, there are 2 million people less on the unemployed rolls. That means you've got about 8 or 9 million people that are technically unemployed, but you've got to fill 11 million jobs. Biggest gap in history with distance. What does it mean? Well, the good news for those that like to work, well, pay raises for everybody. And that's what happened on the Producer Price Index, over 8% this week. The highest reading for producer prices really in modern history in terms of cost increases for companies. The other major component, which we're going to get to, is energy and potentially how to take advantage of that. Here we go with the Dow Jones Industrial Average year to date. You could see the Dow settled back from 35.6 to just below 35,800 or 34,800. So you've had a settling down of the Dow. September's supposed to be statistically the worst month of the year. What do you do about it? You have tactical safety. We recommend between 20 and 30% in our models in tactical safety, dry gunpowder with our targets picked out in growth and innovation, growth with income, and global lending. Those are the components of a great investment strategy that's evolved over the last 35 years. No strategy's perfect. However, the dry gunpowder could come in handy in September if this continues. Notice that's the same level as the beginning of May when the Dow first hit about 35,000. Well, could it be range bound? We don't know. This was a huge profit increase, and you can see the forecast coming out. It was record profits for U.S. companies. The corporate profits off the charts increase is about 20% higher than the record before. U.S. companies did a great job of navigating crisis, and the profit growth continues, but the theme you're going to hear emerging over and over, and we heard it from Morgan Stanley, Citigroup, and Bank of America this week, slowing growth. You're not going to see these massive increases in profits going forward, and that's already becoming apparent. The Dow is up 15% for the year. The S&P is up 21%, mainly because the top tech names have had such a huge rally and become such a big component. They're a bigger component of the S&P than the Dow. So the Dow's up, or S&P's up 21%, Dow's up about 15%. What has done better? Well, these are the pipelines. The pipeline index is a 36% total return so far this year. That's the oil and gas pipelines. Could that be a great inflation hedge? Historically, it has been. And there's some components of what those companies make and distribute. It is the highest dividend category in the S&P and the mid-cap index. And that says, well, that's inflation hedge number one, is get paid a lot of cash. Well, if we look at what happened this week, you can see the cash flows going up. A lot of those pipelines get paid in kind. They take a percentage of the commodity that goes through the pipe, and they also keep big storage facilities. And we're going to get to storage here in just a second. Look at this, $5.05 per million BTUs on natural gas. That's a double since the beginning of the year. Not only has it doubled, Harrison Smith, Indiana Jones we call him, found this chart. What does that tell us? Well, it tells us that there were 4 trillion cubic feet of gas going into last winter, about 3.7 trillion cubic feet of gas going into the winter before. You could see that's the winter time when you use lots of gas. We used a lot of gas last winter because it was really cold, especially here in Texas. Uh-oh. We are 30% below where we should be going into winter time. That is potential shortages of natural gas. Liquid natural gas exportation has gone up to 15% of consumption, and it's scheduled to double again. You're looking at short supplies of natural gas already in Europe, and going into wintertime, this says you could get some huge commodity price increases, and you might want to put solar panels on your house. This is crude stocks. What you're seeing here is the drawdown of excess crude inventories. This is the shale revolution, which oversupplied the world thanks to Texas innovation. Look at this. So you increased to about 540 billion barrels, and here you did it again in the pandemic. Now you're down about 20 to 25% below that level, a more normal level since the shale revolution, but at the low end. So you're looking at potential energy shortages, which is something we predicted from over-regulation of energy markets, creating short supply while you make the green transition. Solar has become profitable, and we've got some solar holdings that have done well with dividends. But the key is you can't get there fast enough, especially since global production has been cut. Part of this was Hurricane Ida and drawing down the crude stocks. How low does it go? We're going to keep an eye on this because it could indicate shortages over the wintertime for both oil and gas. I'm Spencer McGowan, your financial weatherman, with the best in financial news combined with an intelligence read and the real data every week. Be sure to subscribe, share it with your friends that are also interested in successful investing and taking that decision process to the next level in making great decisions in the path forward. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week networthradio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as networthradio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to networthradio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to networthradio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.